Hello everyone, this is Stock Market Daily. Thank you for joining me today. It is April 26, 2023. So at the start of every episode, I always read my disclaimer telling you guys not to copy my trades because you will lose money. And today is a perfect example of how things can go wrong. So looking at the SPX chart, you see that we gapped higher on the heels of good earnings from big tech companies. And we essentially ended up closing the gap. We closed the gap, trended a little lower, and had a little area of consolidation right where the market close was yesterday. And from there, we proceeded to go higher, and everything seemed to be very nice and good. And, we were looking like we're going to have a good day to start. I actually kind of based my trading today on a few things. So I would like to show you the advanced decline line. In the morning, advanced decline line was actually going up quite significantly. And we also had stocks like Microsoft that gapped up and they had really good earnings and things like that. Apple was kind of going up and down, wishy-washy. There's no particular direction. So, and that was kind of the theme for majority of these stocks that I'm looking at here, which is Apple, Microsoft, Amazon, Nvidia, and Google, which make up the SPY top holdings. So, when there's a trend with all of these and they're all going up and advanced decline lines going up, it's very easy. And the same thing when they're all going down, advanced decline lines going down, it's obviously very easy to pick a direction. But when things are kind of doing, every stock is doing its own thing, the advanced decline line is acting weird or funny, it's kind of just choppy. Again, it gets a little confusing, but here we clearly had a very nice uptrend. Clearly, some stocks were already, Microsoft is, if you zoom in here, you could see that, well, this is probably too small, you can't see, but you could see that even with this gap up, it was kind of trending down slightly. However, this was a very large, strong gap up and trending upwards. We were in the positive territory in the morning. So you would think that basically from watching this, that the entire market's kind of going up, and eventually things like Apple and Nvidia are going to catch their footing, and they're going to catch up to the rest of the market. In fact, Google was doing, they sold off really early, kind of fast, and then they started going up significantly, right? They had a really strong uptrend. So you would think that we were going to continue going up. Unfortunately, the SPX did not follow that. They actually did something quite opposite. We did have this kind of a V here and whatnot, but it did not represent the rest of the market. We did obviously have a gap up, just like how it was with the big tech, the Microsoft and then some other, and Chipotle and things like that. That's probably also in there. But nevertheless, it did not follow the trend. And, especially after this big breakdown for the rest of the day, it was kind of very surprising to me, but, we have to take it for what it is, and the market does its own thing. So, I always say I'm looking at these graphs, but don't trust the graph. Don't trust one particular indicator, because you can definitely look at it and see what it's doing, but it will never be 100% in line with what's actually going to happen with the market. All right, so here we had a nice strong uptrend. Yes, we did sell off. We did not even sell off to the bottom, to the levels of yesterday here, and we had a slight downtrend, but nothing like on the SPX where it was aggressive. So I did place a few positions on the call side. Let me get to the right one on the SPX. So I did place a few positions here. I was fully expecting for these calls to increase in premium as SPX would eventually, I thought, would turn around and start going up, but it never happened. And my positions and my orders never got filled. So the only thing I got filled on was, it was actually kind of late already, and I basically filled it just because I saw that nothing was happening and I needed to get something done, right? So it was kind of a Hail Mary type of move. And I filled two of these at 41.05, and the premium was $185 on each contract. So if you watched the video yesterday, you'll see that I was trapped in yesterday's volatile movement, which took me to in the money, and I rolled my put positions to today. So you don't see them here today, and that's because, once again, after the market broke down, I had to roll them out. So we had a position at 4,100. Okay, well, actually there was two options on that, and I had to roll that into not tomorrow, but the 28th. Okay, so what actually had happened was I saw that, at the end of the day, we don't have our bounce. It never came. It came within like 5 minutes of market close, and unfortunately, we couldn't roll this position to tomorrow. There's not enough premium. It was actually asking me to pay some money in order to try and roll it for tomorrow, and I was not going to have that. And I wanted to roll it into. So then I said, okay, I'm going to roll into the 28th. Okay, so I'm going to roll into the 28th. However, my my positions for the actual the hedge, which makes it a vertical, were expiring on the 27th. So when I put the order in and I hit send, I got back an error saying that I can't do that because I don't have enough buying power. So what I had to do is really kind of regroup, kind of spur at the moment. And what I should have done, I should have went out with more time, but I didn't. I just basically picked the 28th, and I picked the lowest cost option, which is 3,350. This one was going for $5 a piece. So I bought two of those, and then I was able to roll the option for the 4,100 on the 28th. So, but like I said, what I should have done, I should have, kind of said, oh, okay. And I knew that I knew that my options on the put side are expiring tomorrow, and they're right here at 2,800. But when I was putting the order in, it was at the end of the day, and I wasn't thinking, and I was like, oh crap, I have to pretty much go over here, buy the option, then do the roll. So anyway, that's what I did, and I ended up collecting $260 on that roll. I tried to roll it to 40.95, but again, there wasn't enough premium. I was only able to collect 260 and roll it to the same strike price. Okay, so that's for that for that particular strike price. Okay, so then we had the 40.85. So you see we have one that is for tomorrow. So that one I rolled from 40.85, not enough premium, so I kept it at 40.85 and I rolled it for tomorrow, at least not Friday or any other day. So at least that one allowed me to roll for tomorrow, and I collected $100 for that roll. So lastly, we have the 40, it was 40.65. So it was right here, we had the 40.65, and I ended up rolling that one for tomorrow for 40.55. So that's right there. And the reason for why the market broke down is we're just having more issues with the banks. The FRC is really, all the news is hurting the markets. Even the, good news from the big tech did not help us. So we'll see what happens tomorrow with that. There's one other position that I took off. Now, if you remember, I had some position. I had a credit spread that was for May 11th, and here's the ones I purchased, and the ones I sold were 4,300. So they're right there, and I ended up buying those for $85 a piece. So so about I think 14 or 15 days ago, I sold this option for $1,200 or so, and I bought this option as a hedge for about $30 or $40, something like that. So now this option decayed to $85 at during the day, and I bought it back. So I essentially removed my margin requirement and I removed my risk, and I collected about $1,100 or so. I'm not quite sure exactly how much. I didn't do the math, but ended up being a very good trade. So I'm going to be doing more of these, but I'm going to hold off until we have more of the earnings are done and until we have our Fed day is done. Okay, so after that, I will probably do more of these, and depending on what the market is doing, I'm going to either do calls or puts or maybe both. So we'll see. And I'm aiming for about $1,000 of credit on the spread. So that is that for today. There's more earnings that came out, and that will come out tomorrow. So it's going to be exciting. We'll see how the week ends. But this drop is pretty significant. This is why I give my disclaimer at the beginning of the video, because if you don't know what you're doing, this potentially could take you out. If your account size can't handle it, you might run into some issues here when things start trending down and the hedge where your option is expiring, right? So like these are expiring, and if they are really kind of close to the money, right? So this is not going to represent a really good, because the market's closed, it's not going to show you the pricing right now. But if we take it to, let's say May 7th, or no, that's not good enough. We'll take it to May 3rd, at least. You'll see that you're going to start, if you're doing a very close spread, you could see that you might run into some issues. So that's why I always give my disclaimer that you could potentially lose a lot of money if you don't know what you're doing. So the 3,200 and the 3,000, these options are still fairly cheap here, but sometimes, I mean, the market did not go down that much in order for me to have to roll 2 days. Now imagine if we're down like another 100, 150 points. What's going to happen? It's going to be practically impossible to start rolling it unless you can go farther and farther in time, right? So farther and farther in time, you're going to have to start paying quite a bit of money here to buy the hedge itself. So just be careful, and thanks for watching, and we'll do another video tomorrow. So please make sure you're subscribed and tune in. Thanks. Bye-bye.